1 minute fair value gap, 15 minutes after the open. Triggers long just before the Asian kill zone, which starts at 7 p.m. Multiple suspension blocks in here, but that's due to just low volume and Sunday market activity. You can shut those off. This one would be meaningful. Really come back here and look at this fair value gap at the very beginning. Volume imbalance at the high. This fair value gap precedes this consolidation. Also overlaps with multiple other fair value gaps in that area. So 7:05 p.m. Trigger long. Stop loss would be the high of this lower fair value gap because of this being candle number 1 in the 3 candle fair value gap formation. Next, this is displacement higher, setting a new high with a candle body above the old high. Meaningful fair value gap. Extend this out. And that covers until the 9 p.m. macro. So 7 o'clock, 8 o'clock, sets a new low with that macro, comes back up, just consolidating, comes down, tests that rejection block. Nine p.m. macro runs up, setting another new high. 4-hour chart at that time. Just inside these bodies. One-hour chart, 8 o'clock to 9 o'clock high. Wick number 1 respects that midpoint. This larger wick from Friday's trading, carry that over, also respects that midpoint. Sunday night price action before a holiday after a fairly volatile week. Not expecting any large moves. So would look for that to be respected. So if this was live action, 15-minute chart. Respects that wick. And live price is back up there to test it again. All right, back to the 1-minute chart. So turtle soup highs. We take out previous highs. One more, followed by displacement lower. This displacement is clearly larger than anything else in the last couple hours. So that's quite meaningful. Not a suspension block, but a nice fair value gap. With this volume imbalance, I do believe you can carry that fair value gap all the way down to there. And the midpoint lines up nicely with those wicks. Down to the 15-second chart. Top of the consolidation, breaks out, runs up, drops. One more breakout for your turtle soup long. False breakout, in other words, displace lower. Short entry, and also down here. So entry 1 is at the low. Entry 2, entry 3, we don't get up in the upper half, which is good. That shows weakness, exactly what we want. And then it breaks lower. Back up to the 1-minute chart. False breakout. And roll over. Short-term reverse turtle soup. Low, lower low. Reverse and chop around a little bit. Yeah, at this point, we're well into the dead zone between Asia and London. Back to the 15-minute chart. Here's those previous highs, breakdown, 1 minute fair value gap, breakdown again. Here's another entry into a 15-minute fair value gap, breakdown again. This would be your second stage delivery on this time frame. Take out this previous low. A purge and revert entry would be at this opening price long. Stop loss down there. Target one is this previous high, hits that. And rolls back over. So, 15-minute wick low, the rejection block. Mark your highest wick. Your lowest wick respects that one. This would be a premium wick. This is a discount wick. This one reaches lower. This would be the one you'd be looking at when these lows are being formed. Once it breaks through this one, this would be the next one to watch. And then finally, that rejection block down at the very bottom. Fair value gap there. Come up, trigger that fair value gap, back up, get out. On the lower time frames, we'll find the entries in here, and then 12:30, nice drop lower. This is your turtle soup short, low, lower low. And the nice explosion higher. 1 minute chart. Here are the lows from 10:30. That wick on the 15-minute chart at 11 o'clock. That wick lower at 11:15. Not a time for trading. There's your short entry. Also, using the buy side of the curve. This is the one you'd really want to use. And you could enter this wick, that midpoint. This displacement turns this into an order block, takes out that swing low, 23.35. Here it is on the 15-second chart. Break down. Nope. There we go. Volume's a bit low. Everything under the 1 minute looks nasty. Anyway, entry number 1. Let's say you took this lowest fair value gap. Easily make your 20 handle target number 1. Extend that out. Both fair value gaps give you another entry here. One more entry using, no, 2 more using this. This would be another entry using this fair value gap, would include this entire area. Does not quite hit these lows here. It does take out the previous lows easily. And takes out these lows here. If you targeted the high of this fair value gap, you should have been filled. Okay, mark this drop with the dealing range. This pullback bodies respect the 0.705 level. Wicks respect the 0.75 level. Rid of that. New week opening gap high, dashed line. That 1 minute fair value gap from earlier. This body respecting this order block. Reverse turtle soup, somewhat. This is a meaningful fair value gap. Realistically, would not have any confidence to go long here at current experience levels. Also, this is before the London kill zone. This displacement higher takes us up above these highs, giving us a meaningful fair value gap and 2 minutes to enter with these bodies here. You miss this one, you can enter in here. Off of that suspension block. And then up, up, and away. Five-minute chart. Highs. Work your way down. This is anyway, entering here. Be watching this 15-minute wick. First target, second target. This is the draw for liquidity, this new week opening gap. This is what looks like the low of the upcoming opening range gap, unless price turns back around by Tuesday morning. On the 1 minute chart, we have caught up to there. Work higher, work higher. Pull back into 15-minute fair value gap right here. Working higher. This looks like it's good chance of it being another turtle soup. Hourly chart. There's a fair value gap inside this larger wicks range. And looks like we might keep going. Let's see how these next few candles play out. right at a event horizon level, which is the midpoint between two new week opening gaps or new day opening gaps, but in this case, it's the new weeks, and breaking past that with displacement. "15-second chart. Here's that candle that broke out past the event horizon level. Also getting us past the high of the 15-minute wick and the smaller 1 hour wick. A reaction off of the 1 hour fair value gap. This candle turned that into an order block. Aggressively, you can short on that. This is also a short entry, and this appears on both 15-second and 1-minute charts. So volume imbalance, run back up, touch that, short, bam. This is another entry, more realistic entry for our skill levels. This would be difficult for us to enter on since we are going to be more likely to want to see some confirmation, which would be this candle dropping and creating an order block, changing the state of delivery, etc., etc. Little wick, bap, bap. Nice clean entry. That's what we've been looking for more often than not, since it's easier to see. And now we should work lower. 3:30 key time ahead of the 4 o'clock macro. It's run 20 points from this aggressive entry, 15 points from the 15-second fair value gap. At the midpoint of the previous price run, this previous pullback also stopped at the midpoint of the run. Happens to be a small suspension block, but that suspension block's from the middle of a consolidation. Should hits these larger ones. So you've got plenty of overlapping PD arrays or confluence, whatever you would like to call it. Here, down, back up, one more entry into this order block. Everything is respecting bearish PD arrays so far. Mark that wick. It's respecting the bodies well enough. Mark that one. Buy side. Bit more meaningful. Respecting that one. And there it goes. Making another low and hopefully starting the next meaningful run lower. .62. Entry. Entry. Taken out a low. Good place to partial. Got the 3/4. If you're using a 1-minute trail stop method, your stop loss will be right there. If you're leaving it more room to run, your stop loss would be near your break-even point. If you're trailing 2 minutes behind, your stop is there, but that is usually the less preferred method. And looks like it's going to stop that out. Which most likely would have happened right there. If you had left room to run. This would be another entry point if you're expecting a larger move lower. But with tonight's conditions, better idea to take base hits. Like these two exits here. If you had your third phase on, that one would be left risk-free, stop near break even. That one would probably still be in the game. All right, this is why it's a good idea to take base hits on nights like this. Run up a bit, run down a bit. Definitely bullish overall. Hourly charts respecting everything and making its way higher. Clearly. 15-minute chart just gave you multiple entries long over the last few hours. It never really went short. Same with the hourly chart. 5-minute chart got a little choppy. But if you were long, nothing really should go all the way out, bias-wise. And for any retail traders, it took this breakout, and now it's going back down again. Which is why it was a good idea to mark this fair value gap. Let's see how these wick quadrant levels play out. We hit the 3/4 quadrant level of that big wick. One-minute chart. Here's that 3/4 wick quadrant level. Body's respecting it clearly. If we're going to go higher, should expect a nice surge, just like this body breaking through this body. This displacement. Suspension block. Overlapping fair value gap, overlapping suspension block. 8 minutes into the 4 a.m. macro. It's respecting the rejection block. Bodies are respecting the fair value gap, at least for now. Which way you gonna go? This is not a point where you would want to get in since it's run up a decent amount and it's hitting that 75% level on that large hourly wick. You'll either have a meaningful pullback here or really power through and take out Friday's high. So far, it's looking more weak than strong. "15-second chart. Still respecting the midpoint of that rejection block, but if I was short, I wouldn't be very happy about it. And continuation should be happening soon. Five minutes left in the 4 a.m. macro. The consolidation inside the rejection block. Now it has broken back down below it. Probably just a trigger long, but we shall see. Or a macro, definitely not one to trade tonight. 3 a.m. was good. $3.30 was good enough. $2 so. You had to get in early, ideally. That was the easiest one. Yeah, 1 o'clock, you also ideally a little early or a little late. 12 o'clock. Right on the button. $11 setup. 11:10 entry. Too small of a range, only 10 points. Good night for tape reading, not a good night for trading. Not every hour anyway. Ranges are pretty tight. Lots of consolidations. Seven o'clock gave you easy 20 points. 8 o'clock long, you had to sit through consolidation, but you could have gotten 20 points. Nine o'clock short. Nice big run. Effortless 20 points. Going to call the last hour of London a dud. I'm sure it'll have one more pop, but test recording number 1 will be complete.